Hello and welcome to Unacademy IAS, a one stop destination for all the English medium civil services aspirants. Welcome to another session of Economy this week, wherein we are going to cover economy related articles from different newspapers from 5th to 11th March 2026. This discussion is going to help you answer the questions in the prelims as well as mains examination. If you're liking the initiative, do not forget to hit the like button. And if you're yet to join our YouTube channel, kindly do it right now. Before I start with the first article, here is a very important announcement. The final list for the Civil Services Exams 2025 has been published by UPSC. And we are happy to announce that in the final list, 585 of Unacademy's learners are there. Out of these 585, more than 100 learners were part of online classroom program. The other learners were part of the free initiatives that we undertake on our platform along with the interview guidance program. And as a part of the celebration, now we are offering our courses at a discounted price of 16,999. And once you use the code IAS English, you'll get access to the recorded as well as live lectures, prelims as well as mains test series, the UCAN current affairs program, etc. And mind you, this particular offer, I've been told, is going to end tomorrow. So those who are interested, do check out the details by using the link provided in the description below. Let me start. The first important article, the central government okays 84,000 crore in boosting post-harvest assets. Now, what are the important points? Point number one, this has been decided by the Government of India under an initiative by the name of Agriculture Infrastructure Fund. Agriculture Infrastructure Fund. I'll start using the short form of this, AIF. Now, under this particular initiative, the Government of India wants to focus on promotion and development of post-harvest infrastructure. Post-harvest infrastructure. What do I mean by post-harvest infrastructure here? When you talk about agriculture sector, there is a proper supply chain. There is a sowing of a particular seed. Then there is a harvesting. And once you harvest the crop, there are multiple types of infrastructure that you require. For example, you will require warehousing infrastructure. You will require processing infrastructure. You will require sorting and grading infrastructure, etc. Again, these are some of the examples, by the way. So, multiple types of infrastructure is required after the harvesting of the crop is done. The Government of India has realized that there is a shortage, there is a structural issue associated with India's agriculture, and this particular structural issue is shortage of post-harvest infrastructure. For example, if there is no sufficient warehousing capacity available, which is the situation right now in India, be it for horticulture commodities or for that matter cereals, what will happen is the production in India, every year we produce record output in lot of these agriculture commodities. Now, because there is no warehousing infrastructure, some part of it will be lost. Some part of it will get destroyed. And if you do not have sufficient, let's say, processing infrastructure, sorting and grading infrastructure, etc., you will not be able to promote food processing, which is one of the objectives of the Government of India, by the way, to promote food processing in India so that the post-harvest losses can be minimized, jobs can be generated, exports can be driven, etc. So, keeping in mind all of these particular objectives, the Government of India has announced Agriculture Infrastructure Fund, which is going to be implemented till 2032-2033. Under this, the Government of India until now had announced 1 lakh crore rupees worth of assistance. It had allocated 1 lakh crore rupees. So what are the very important changes that has been announced by the government? The amount now has been doubled from 1 lakh crore rupees to 2 lakh crore rupees. Please make a note of this. And when I say make a note, please make a mental note. Do not have to write down these particular points because this is essentially the screenshot from the notes that you will be able to download from the link provided in the description part of the video. Use the link. You will get access to the PPT as well as the notes PDF of this particular session. Download, but more importantly, use it for revision purposes. So most important change, one, it has been decided to increase the amount of funds under this initiative from 1 lakh crore rupees to 2 lakh crore rupees. Very, very important point. In addition to this, other important points associated with the initiative are that, one, the government under this will provide for interest subvention. Interest subvention meaning what? You take a loan to develop any type of this particular listed infrastructure, you will have to pay a rate of interest to the bank. Now, part of the rate of interest will be borne by Government of India. So, the 3% interest subvention with a cap of 9% on the rate of, right, let's say the investment or the loans that you have taken, that will be provided. Second very important point associated with this is, right, have a look at this, the facilities, the loans up to 2 crore rupees, right? Now, the loan facility will be provided with the maximum repayment period of up to 7 years with the listed or notified financial institutions. You'll also get access to, right, let's say this particular facility, but the government simply says certain amount of investment in the infrastructure has to be done by the borrower. It's not that complete cost of the project will be borne or will be paid by the or will be given in the form of a loan. No, part of the project cost you will have to invest, and that limitation is at least 10%. At least 10% of the cost of the project the borrower has to bear. Remaining, right, can be taken in the form of a loan. Right, so these are certain very important points in the context of Agriculture Infrastructure Fund, and according to the data provided here, which I don't want you people to learn, by the way. Reason being, from one quarter to another quarter, how many projects have been approved under this, number will keep on changing. How much worth of the funds have been released so far, number will keep on changing. So just for the sake of information, right, so far, right, multiple thousands and thousands of the projects have been approved, and the latest round, in the latest round itself, 84,000 crore worth of infrastructure projects have been approved, right, to boost the post-harvest infrastructure under Agriculture Infrastructure Fund. So these are important points in the context of this initiative. Now, based on this, let's solve an MCQ. Consider the following statements regarding Agriculture Infrastructure Fund. The borrowers under this do not require to invest any amount. Will they get the complete cost of the project in the form of a loan? Absolutely no. They are supposed to invest at least 10% of the project cost. First statement is incorrect. The scheme focuses on development of post-harvest infrastructure. Yes. The scheme also has a provision for interest subvention. Yes. Right, up to 2 crore rupees of loans, there is an interest subvention that is provided by the government. So second and third statements are correct. Right option for the question is option B. Only two are correct. Let's go forward. Next important article. New farm sector scheme gives a thrust to 100 Laggard districts. Now, what is the idea? The government of India has identified 100 low performing districts. 100 low performing districts. And this idea of identifying the districts is essentially again borrowed from one more initiative of Government of India, right, where more than 100 districts have been identified, and right, the certain amount of infrastructure is being developed under these particular districts. So argument is simple. We have identified 100 districts, and the identification has been done based on certain parameters. For example, we have used parameters such as low credit issuance, low credit issuance. We have identified these particular districts based on low productivity, low crop intensity. So these kind of parameters have been used by the government to identify the low performing 100 districts. And the objective is, the government has announced an initiative, Pradhana Mantri, right, PMDDKY, Pradhana Mantri Dhana Dhanya Krishi Yojana. Dhana Dhanya Krishi Yojana. And under this, multiple objectives have been decided by the government. Right? For example, under this, the government simply says, I want to increase agriculture productivity in these 100 districts. Crop diversification and sustainable agriculture practices shall be promoted. Augmenting post harvest storage capacity at the panchayat as well as the block level so that the losses can be reduced after the harvesting is done, and greater access to short term as well as a long term agriculture credit will also be promoted. Please remember, all of these objectives can be a straightforward question in the preliminary examination. It will also promote access to irrigation facilities. So, with this objective, the government of India has announced the right Dhana Dhanya Krishi Yojana. And what is the objective, or what is the end goal that the government of India is trying to achieve here? The government of India simply says, just like we have implemented the other initiative, right here, the government for this year has allocated 24,000 crore rupees. 24,000 crore rupees. And mind you, this allocation of 20,000 crore, 24,000 crore is not a new allocation. It's not a new allocation. It is essentially, right, the allocation which has been done for multiple other schemes. The government has realized that there are multiple schemes which are being implemented by different departments. 30 plus, more than 30 schemes have been taken and merged into the concept of Dhana Dhanya Krishi Yojana. So rather than allocating individually for all the schemes, whatever allocation is there, allocation has been done, that has been merged into this year's 24,000 crore rupees. And this will be implemented, and this initiative has been planned by the government of India for 6 years now. It has been planned for a period of 6 years. Right? So government of India now is implementing this initiative in order to improve the productivity in agriculture sector in the lowest 100 districts. Okay, so these are certain important points. Let's go forward. Let's solve a MCQ associated with this. Consider the following statements regarding PM Dhana Dhanya Krishi Yojana. It is a centrally sponsored scheme. It is incorrect. It is a central sector scheme. It is modeled on the aspirational districts program or aspirational districts scheme. I did not mention the name of the scheme earlier, but the statement is correct. The government of India under aspirational districts program has identified 112 districts, right, based on certain parameters, and the objective is to develop certain types of infrastructure amongst many other objectives in all the 100 plus districts. So this initiative is modeled on the same idea. Okay. Third one, the scheme aims to leverage the corporate social responsibility. The statement is also true. Slightly tricky, but true. The government of India is basically promoting CSR funding, or the investments or the expenditure that the companies will have to undertake under CSR. Government basically says it is eligible under this initiative. Right? So second and third statements are correct. Right option for the question is option B. 2 of the 3 statements are correct. Let me go forward now. Third article, India-UAE currency bridge. India-UAE currency bridge. Now, what is the discussion here? Point number 1. Reserve Bank of India, it's been more than 3 years since it has been promoting the idea of central bank digital currency, CBDC, or else also known as e-rupee. What is the basic idea? Instead of printing and issuing the currencies, RBI simply says, I will issue digital currencies. And just like RBI, there are many central banks around the world which have been following the same model. For example, the UAE Central Bank also has issued the e-currency, that is the digital currency. Digital dirham has been issued by the Central Bank of UAE. And are these the only 2 examples? No. Central Bank of China also has issued digital yuan. Many other countries around the world are basically trying out this idea of a digital currency issued by the central bank. Now, what is being discussed? Right now, when you talk about transactions between India and UAE, one example I'll tell you about remittances. India is the largest recipient of remittances in the global market. That's a fact, by the way. Largest recipient. The amount of remittances that we have been receiving have crossed more than $100 billion for multiple years. And very recently, it has hit even $130 billion. And that is good for us. But the problem in terms of, let's say, conducting transactions is that you need to keep on converting one currency into another currency, because the transactions are generally done where the money is transferred, money is paid, accepted, received, etc., in the form of a global currency or the universal currency such as dollar. But when you keep on converting the currencies like this, there is a cost of transaction associated with that. With a higher cost of transaction associated with these kind of, right, let's say transactions such as remittances, the amount of remittances that you can send will also be affected. So can we develop this kind of a system where, let's say, we will simply transfer the CBDCs? We'll simply transfer the CBDCs, that is a central bank digital currencies, from one wallet to another wallet. Wallet to wallet transaction. And because, mind you, unlike, let's say, the rupees traditional concept, unlike dirham, which is present in physical form, the CBDCs are not in physical form. Rather, these are digital. So the wallet can be utilized to transfer the funds from, let's say, one wallet to another wallet, whether within India or outside India. Within India, anyways, we can transfer. But now, once we develop a e-currency bridge, essentially a connection, a linkage, once we develop this kind of a linkage between, right, let's say the e-dirham, that is the electronic currency on the other side, and e-rupee on this side. Once we develop a bridge like this, now the CBDCs can be transferred very, very easily. This will reduce the time taken for transfer of the funds. It will reduce the cost associated with, let's say, sending and receiving funds. And I gave you one example. I gave you example of remittances. But mind you, there are multiple transactions which will happen between, right, let's say, the seller and buyer, right, the sender and receiver, which are present in these two countries. For example, imports and exports, remittances, right? So there are multiple examples, or for that matter, investment flows, etc. So what the RBI and the Central Bank of UAE are trying is essentially develop a connection so that the transactions, let's say business to consumer, business to business, right, let's say one individual to another individual, etc., all these transactions now can be done very, very fast and consume very less, right, let's say they can be done very fast and also reduce the cost associated with the transaction, right? So with this objective, there is a discussion that there should be a bridge that should be established between both of these currencies. Mind you, not the physical rupee, not the physical currencies, but the CBDCs. Done? So based on this, let's look at a question now. Consider the following statements. UAE is part of the Gulf Cooperation Council. UAE is part of Gulf Cooperation Council? Yes. GCC. Is UAE part of it? Yes, absolutely true. UAE's central bank has issued digital dirham as a legal tender. Yes, that is also true. Third statement, the e-rupee is issued by RBI is also legal tender. Yes. What do you mean by legal tender? What is the meaning of the term legal tender? The meaning is very simple. Whenever you use the term legal tender, it simply means it has been notified by the government. Now, it shall be accepted whenever there is a settlement of a debt. If I owe money to anybody in the market, Indian rupee is a legal tender. I will use the Indian rupee to settle the transaction. That is the meaning of the term legal tender. Right? All the three statements are correct. Right option for the question will be option C. Let's go forward. Next important article, training at, right, the Industrial Training Institutes, ITIs, Industrial Training Institutes. Now, what are the important points? First and foremost, please understand, whenever you talk about labor in India, whenever you talk about labor, there are a lot of issues, there are a lot of, let's say, concerns associated with the labor. And one such issue is that the labor have skill sets. The labor has skill sets, not a problem. But these skill sets do not match the demanded skill sets by an employer. Is everybody okay with the statement here? I'll repeat it. The skill sets that I have are different compared to the skill sets that the employer wants me to have. This is essentially a skill gap. It is essentially a skill gap. And a lot of time it happens for a simple reason. These trainees are trained in multiple, let's say, right, institutes. For example, we have multiple industrial training institutes which are located, which are set up across the length and breadth of India. Now, these ITIs will provide training to candidates, will provide the certificate. Now, these candidates are supposed to go to the market and get a job. But the problem is, if you provide the complete training on the campus itself, I'll repeat, if you provide the complete training on the campus itself, don't you think the candidates may not have the correct skill sets or the right skill sets which might be demanded by the employer in the market? So what has the government of India done now? Very simple. Government of India has introduced a dual training system, DTS, a dual training system. And this particular system will be applicable across all the 14,000 plus industrial training institutes which have been set up across India. Under the dual training system, now, whenever the training will be provided to the candidates at ITIs, it is mandatory that 150 hours of on-the-job training shall be provided. Very simple. 150 hours of on-the-job training is provided to the candidates. Meaning what? Annually, let's say I will be spending 1200 hours of training. Until now, the annual training hours was 1600 hours. It has been rationalized to 1200 hours. Now, let's say annually I'll be trained 1200 hours at the Industrial Training Institute. Now, the ITI must ensure that out of this 150 hours I'll be spending in a particular company. And what is the objective of this? If I'm being, right, let's say used for 150 hours, if I'm going to be used in a company, right, if I'm used in the sense, if I'm going to be asked to work in a particular company, don't you think the company will provide me the correct kind of training that I require? I will be able to understand what kind of machines are used by the companies, what kind of skill sets are needed in the companies. I'll be trained by the companies now. So the idea or the problem of skill supply and skill demand, which was basically a gap earlier, which experienced a gap earlier. There's a skill gap earlier. Now this particular skill gap shall be addressed by this kind of a new regulation that the government of India now has made it mandatory. Mind you, it is mandatory now. You will have to essentially provide this across all the ITIs. There is no other option. You will have to provide it. Done? So these are certain important points. The government of India has made a change in the context of training. Please be very careful. Next article, Basic Savings Bank Deposit Accounts, BSBDA. Basic Savings Bank Deposit Accounts. Now earlier, that is last year, in the monetary policy that was announced by RBI in the month of October, RBI governor had made an announcement, essentially stating that the digital banking services will also be provided to the account holders which are basically classified as basic savings bank deposit accounts. Now, what do you mean by basic savings bank deposit accounts? When you open a bank account with a bank, right? Let's say you open a bank account with a bank, you can have different types of accounts. You can have time accounts or basically the time deposits. For example, you can open a fixed deposit with the bank. And within FD also there are different types, different tenures, etc. Another option is you can open a demand deposit. What is essentially a demand deposit? It's a kind of deposit wherein the money can be withdrawn by the customer whenever the demand arises. And the customer will demand the money, the bank will allow the money to be withdrawn. That is demand deposits. Now, within the demand deposits, there are different varieties. You have current account, you have basic savings bank deposit account, you have right savings bank, common savings bank account, you have a salary account, etc. Now, within this, RBI right has basically been promoting the idea of a basic savings bank deposit accounts. These are essentially the most basic savings deposits or savings accounts where there is right a limitation in terms of, let's say, how many withdrawals you're allowed to do, right, where there is right, let's say, provision basic services such as right, let's say, how much deposits in a month you're allowed to do, how much money can be kept within these kind of accounts. Best example for this is Pradhan Mantri Janadhan Yojana, PMJDY, right, PMJDY. So under PMJDY, lot of these accounts have been opened in the bank. So finance minister now has announced that when a customer will open these basic savings bank deposit account, if they do not meet the minimum balance requirement, if they do not meet this minimum balance requirement, that is essentially when you open a bank account, based on the type of account you have opened, the bank would have reminded you, the manager would have reminded you that at any given point of time, you are supposed to maintain this much amount. For example, a lot of these particular banks will mandate that you are supposed to maintain 1000 rupees. Again, some banks will mandate 1000, some banks will, especially private sector banks, will ask you to keep 10,000 rupees, etc. Do not worry about that. But if your bank balance falls below this required amount, if it falls below this particular required amount, then the banks will impose penal charges, penalty from your account will be withdrawn. Right? This is basically when you are right following, when you are not able to maintain this minimum balance. So the finance minister now has announced that if these bank deposits are basic saving bank deposit accounts, BSBDA, in such cases, even if the minimum balance is not maintained, the banks will not be allowed to impose and collect penalties. Is it okay? Right? The banks will not be allowed to impose and collect penalties. Right? This is a very important update. More than 72 crore accounts, essentially are classified this, including those under the Pradhan Mantri Jan Dhan Yojana, and this will provide a relief or the benefit to all these account holders. Next one, two more articles, just an update. First one, SEBI has set up an expert panel. SEBI has set up an expert panel expert group to chart tech roadmap for markets. Now, do not worry about the right, let's say, the panel as of now. Reason being, the panel has been set up. Let the panel study, give recommendations. Then we will right explain, or we will basically dissect what are the important recommendations. Then what is the importance of this article? The importance of this article lies in one of the paragraphs, that is the Nifty 50. There is an index in India. I'm pretty sure all of you heard of this. The Nifty 50 index has completed 30 years. The Nifty 50 index has completed 30 years, and that is important for your preliminary examination. Please remember this. We have a BSE. From the BSE, we have Sensex. In the BSE, we have Sensex, and in the NSE, we have Nifty 50. Essentially, the change in the market capitalization, of course, free float market capitalization of the top 50 companies, right? The 50 companies in case of National Stock Exchange, right? So this has completed 30 years. So this is important point. Please make a note of this. And final, right, article, right? Just a point here. The government of India set up a 17-member panel. Government of India has set up a 17-member panel for implementing reforms in the special economic zone. The SEZ Act has been implemented post 2005 in India. But in recent times, there have been certain concerns regarding the operations, or basically the profitability or the working conditions of the companies within the SEZ. Already there is a committee recommendation which is there with the government of India. But the government of India now has announced a 17-member panel. right? And I know some of you might be thinking, sir, you said already a committee recommendation is there. What is the name of the committee? Baba Kalyani Committee. Baba Kalyani Committee. Okay, Baba Kalyani panel has given set of recommendations. Now the government of India has announced it will be setting up one more 17-member panel which will evaluate the policy of special economic zone. What is the impact of different schemes, how it can be revamped, etc. Now, beyond this, do not worry about the policy recommendations of the committee because it is yet to give the recommendations. Like I said earlier, let the committee give the recommendation and we will dissect the important recommendations under the initiative of economy this week. So, these are the 7 important articles I wanted to discuss with you people in this initiative or in this edition of economy this week. If you have liked the session, do not forget to hit the like button. And if you're yet to join our YouTube channel, kindly do it right now. Thank you. Have a great day.